All right, good afternoon, everyone. On behalf of the National Glass Association, thank you for joining us for today's Thirsty Thursday webinar featuring NGA's own Katie Devlin. This webinar was pre-recorded earlier this week, but Katie is available on the webinar and will be able to address questions live at the end of the presentation. So I do encourage you to keep note of those as you're watching and use the Q&A feature in your Zoom toolbar to share those questions, which we'll get to at the end. But before we dive in, we have just a couple of updates about other association activities. The BEC conference, one of our largest educational and networking events, is less than 3 weeks away now. This is a busy slide, I know, but it gives you a quick glance at the excellent content that is waiting for you. Topics range from the success and well-being of your personnel to improving relationships and efficiencies within a project team, how to manage your contract exposure when it comes to delay claims, and how technology continues to influence how we get the job done. Taking place in Nashville, we are on pace to set another attendance record this year. So if you haven't registered yet, now is the time. Visit glass.org to make that happen and note the URL in the footer of this slide. For the second time, Glass Processing and Automation Days, or GPAD, will take place immediately following from March 5th to 6th. Again, a busy slide, but these are topics you can expect to hear about from our sponsors and subject matter experts. Fabricators, we are looking at you with this event. This one is for you. Get a peek behind the curtain, learn about your software and technology options, meet people who can help you decide and implement investments that will increase your efficiencies and in turn your profits. Between the BEC conference and GPAD, we hope we've made it an easy decision for you to spend a few days with us in Nashville very soon. Again, visit glass.org, head to the events menu, and learn more about each of these important events. NGA's third annual Glass and Glazing Advocacy Days will take place May 14th to 15th in Washington, D.C. For the folks in your company who are actively working on products impacting such things as sustainability, bird-friendly glazing, school security, and workforce training and development, and those who are passionate and interested in meeting with the representatives of your state and those influencing these conversations on the floor, this is for you. Take a look at the advocacy section of our website as well. You'll find information on our priority issues, legislation that has been impacted, and talking points. These talking points can and should also be used at your state level and local jurisdictions to help shape any of your advocacy-directed conversations. So now with that, let's move on to today's feature presentation. Help me welcome NGA's Content Director and Editor-in-Chief of Glass Magazine, Katie Devlin.
Thanks so much, Sarah, and thank you everybody for being here for our Thirsty Thursday for February. As Sarah mentioned, I am Katie Devlin. I'm the Content Director for the NGA, and I am Editor-in-Chief of Glass Magazine. So I'm not an economist, even though I'll be talking through some economic indicators here, but we here at Glass Magazine, I've been with the industry for 20 years now, all at the NGA and in Glass Magazine. And a huge part of what we do is keep an eye on the prognostications, the forecasts from the leading construction economic folks out there. So this presentation is really a summation of all of the things that we're keeping a very close eye on regularly. If there are any data points, metrics, things like that you think we should be tracking on our side for the glass or fenestration segments of the business, please do reach out. My email is on the screen, and let us know. So for our talk today on 10 industry metrics you should be watching, I'll start out with some overall economic statistics. We'll move on to supply chain, employment jobs, construction jobs, manufacturing jobs. We'll look a little bit more closely at construction spending, forecasts for construction, and I will close out with some metrics from our internal NGA reports at the magazines, Window and Door and Glass Magazine. Number one, US GDP. So this is, I think the GDP as well as maybe the employment stat that we'll see in a few slides. These have been the big industry or really economic benchmarks that have flummoxed economists since we have come out of the recession or out of the pandemic. The overall economy has just not behaved quite as folks expect. So last year when I gave this talk, I was at an NGA glass conference. At that point, so January 2023, the majority of economists, more than 60%, I think, were projecting that the US was headed for a recession in the next 12 months. That just didn't come to pass. You can see our US GDP numbers throughout the year. We had a pretty monster quarter three, 4.9% increase in gross domestic product and a 3.3% increase in quarter four. So we're coming into 2024. We're now, in the second month. Forecasters are quite a bit more optimistic. Many are hoping or thinking that we have executed that soft landing and are thinking that 2024 will hold some more growth in GDP, albeit at a bit of a slower pace than we saw in 2023. What about inflation? This has been one of those data points that I know has pinched our businesses on the glass and fenestration side pretty tremendously. You see that 2021, 2022 numbers in the chart on the right. Things were pretty tough in terms of inflation. Costs were going up in every side of the business, every side of what you're dealing with in your home lives, energy costs, food, all of it was going up. Things actually peaked at inflation peaked at 9.1% in June 2022. December, all of 2023, those inflation figures were beginning to come down pretty nicely. And 2023 closed out with a 3.4% inflation number for December. One sector that I just pull out in this stat here is the energy sector, where inflation was down a huge, that's a huge drop from its peak. So things are getting better. But we'll return to this in a little bit when we talk about interest rates as these inflation figures are being very closely watched by the folks over at the Fed. So what about construction input prices? What has material cost looked like in our area of the business? So we have here, this chart is the producer price index for all of the inputs to construction, and it follows really a very similar chart to what we see with the overall economy. So we saw massive increases in price, obviously coming out of the pandemic. Or out of shutdown in particular. We had huge supply chain constraints matched with just overwhelming pent-up demand. So, we see that huge hump that kind of lasts through 2022. And then 2023, things really started to regulate. And that's noted in the numbers that I've called out on the left. But of course, our prices for construction material inputs are quite a bit up since pre-pandemic, up near 40%, as you see in that third bullet point. And the PPI, I thought I'd pull that out for glass and glass product manufacturing as well, so we could take an even closer look at our industry. And we see a very similar chart there. 2023 was fairly stable for glass and glass product manufacturing PPI. The December numbers were just up a fraction of a percent, up a smidge year over year, almost 5%, but it's up 23% from pre-pandemic. All right, let's look again at overall economic data, thinking back to that overall inflation number we talked through, and move to interest rates. So, as I mentioned, the Federal Reserve is very closely watching that inflation rate as they are seeking a sustainable 2% rate before they will tick down interest rates. You can see on this chart of interest rates, we went from just bottomed out levels in that post-pandemic period, and then very precipitous increases in borrowing rates through 2022 into 2023 when it plateaued. And it stayed at that stable level, which is actually a pretty high level, 5.4%, a 22-year high. The Fed has indicated that it's unlikely to cut rates in March, though Powell has signaled in his recent reports that we will see 3 quarter-point rate cuts in 2024, likely all happening in the latter half of the year. So, we have to wait and see a little bit, but the markets seem to be pretty optimistic on this front. I did, take a look at mortgage rates. So even though our overall interest rates are staying at the same level, mortgage rates have begun to come down a little bit. We'll see how sustained that is. They peaked at about 8%. And when I looked at the data to pull this slide together, I guess about a week and a half ago, the rate was 6.6%. And this quote here from Powell just reemphasizes that the Fed will be moving with caution to make sure that we don't move too quickly on reducing these rates. Supply chain. This was a topic that kind of went from a bit of an afterthought to post-pandemic being a key concern for our industry companies. Supply chains were wildly snarled for a very long time coming out of the pandemic, and prices as a result were also very high. Things have been pretty much back to normal for the better part of a year until last month. Those attacks in the Red Sea on some cargo ships have forced many, or have led many of the big shipping companies to decide to go around the continent of Africa rather than going through the Suez Canal and through the Red Sea. So that is increasing freight costs. It's not directly impacting our ports in North America yet, but any big event like this that happens globally is going to have a ripple effect, per the quote here that we see on screen. So costs for containers are up right now, though they are sure down from where they were at the peak. That final bullet just shows what it was at kind of the height of this supply chain challenge that you all saw in 2021. So just another thought on supply chain. In my research and my temperature check of the status of supply chain globally, a lot of folks are pretty concerned about water levels in the Panama Canal. We are starting 2024 at historically low levels, and if shipping is not able to progress through the canal like it normally does, that will have a really big impact on our ports here, as it will just increase shipping times, increase costs. So that's something to keep an eye on, as the Panama Canal is relied upon by 3 of our 5 largest ports in the U.S. Okay, so now let's take a look at jobs. Just like with GDP, this is another category that has really surprised economists. The U.S. employment has continued to perform much better than most economists have expected. That happened in January. You see, we added more than double the median forecast of jobs. More than 3 million jobs were added over 2023. Forecasters project annual growth of 1.4 million jobs in 2024. And we still see a pretty low and steady unemployment rate in January that came in at 3.7%. What about jobs in the construction sector? Well, we're also seeing steady growth for jobs in this arena, but the biggest concern that the numbers begin to reveal is that there are more job openings than new hires coming in, and that is because of the ongoing labor shortage. I was giving a similar talk to this last week for the NGA Glass Conference, Isle of Palms in South Carolina, and I just noted to the folks there, surprise, we are in the midst of a pretty an ongoing, pretty serious labor shortage that is going to become the top concern, I think, for most of the companies in our business. Certainly, every company in construction that I have chatted with in the last 5 years has mentioned labor. So So jobs are coming in, but not at the rate that we need them to. And this slide is looking at hourly earnings, just to show the other side of the equation. So wages have gone up for folks in construction, 5.3% year over year. And the premium for construction workers is up 18.7% over the private sector average. What about glazing? This slide pulls some statistics from our Glass Magazine Top 50 Glazers report. And it really just emphasizes this challenge, this labor challenge is top of mind for this sector as well. 62% say recruitment is their biggest hurdle and the most difficult positions to fill: glazers and field labor, project managers, and estimators. So how big is this labor shortage? How big of a concern is that for the construction side of things? Well, this chart on the right is from the Associated Builders and Contractors, and they have a model of, pretty much how many more positions we're going to need to keep up with construction demand. And according to their recent report that came out at the end of January, we will need an additional 500,000 workers in both 24 and 25 on top of our normal hiring pace of hiring, just to keep up with demand. 500,000 additional workers each year on top of our normal hiring. That's a pretty huge shortfall, and that's presuming that construction spending growth slows significantly. So that's, thinking of coming in with a bit more of a pessimistic outlook of what's going to be happening with construction spending. So obviously, this is a top of mind challenge for everybody who's listening to this. Just to fill out the picture, since our industry is not just reliant on construction sector jobs, but also manufacturing, we're seeing this in the manufacturing environment as well. According to a study from Deloitte and the National Association of Manufacturers, the U.S. will see 2.1 million unfilled jobs by the end of the decade in manufacturing. The chart on the right just shows the positions in particular that we're going to be needing. So jobs, that is, my one takeaway, and it's probably not a surprise to anybody on this call, but that is the biggest headwind for everybody here. The National Glass Association actually shifted its goals in 2023 to add workforce development as one of its 4 key goals for the year. And that's just reflecting this environment that we're seeing in these numbers. We need to be all finding ways to find and keep folks in this wonderful industry. And my colleague Jenny Chase, who's our Vice President of Workforce Development, I think she's going to be joining the Thirsty Thursday podcast a couple of times this spring to talk through some specifics in our workforce, some specific workforce development activities that could help here. All right, let's move on to construction spending. So spending is increased. We are up a little bit from November. These are December numbers here, up 14% year over year. So it wasn't an all bad year for construction. But as Ken Simonson, the chief economist for AGC of America, notes here, how does inflation play in here? We spent some time talking about the increase in costs for all of these construction inputs. How is that coming to play here on our construction spending? How much of this increase are we seeing is from just the higher cost of things, and how much is actually, new units that are going up? And this slide breaks down our construction spending totals by segment a bit more. I won't read through all of them. You all can kind of see them there, but the top bullet is looking at private residential construction. And this one maybe gives us a little bit of an indicator of how much of this is, an increase in construction costs due to material prices, and how much is an increase in units. So private residential construction was up 6.8% year over year in terms of spending. Units, it was up 6.1%. And also, for the folks in residential here, I know that sector has been has been feeling a bit more of a slowdown in the last year. And even before that, residential construction is sort of a leading indicator. High interest rates certainly haven't helped folks on the single family side of things, but single family home building increased 1.6% in the latest report, and that was the 8th monthly gain in a row. So maybe some good news for the folks that are working in the residential side. All right, what about the construction forecast? So the next two metrics we'll look at are indices that provide a bit of a prognostication about what might be coming for construction spending. The first is the ABI, the Architectural Billings Index from the AIA. I'm sure a lot of folks on this call are familiar with this, but just a quick preview for people who might not be. Any score above 50, according to the ABI, indicates an increase in billings during that month. Any score below is a decrease. And these numbers roughly indicate what might be coming for construction in 9 to 12 months. Obviously, if you have new billings going to architects, we will see a building, money's going to contractors, subcontractors, material suppliers, all of that, a little bit down the road. So it's a good indicator to keep an eye on, as it, foretells a bit what will be coming and which segments are strong. 2023 was a tough year for the ABI. ABI fell below 50, meaning a decrease in billings for 8 of the 12 months. And you can see that it ended the year with some pretty low figures. Backlogs, however, remained very strong throughout 2023. And backlogs had reached a peak in 2022. So it's possible that some of the decrease in billings is just coming down from these incredible highs of that, immediate post-pandemic boom. But a great indicator to keep an eye on. This slide looks a little bit closer at the ABI according to construction segment. We've got commercial, industrial, institutional, and then multifamily residential. All of those ended the year at pretty identical ABI markings, but you can see that residential number was bleakest throughout the year. Institutional actually had a few months, a few more months where it was carrying the ABI above 50. So if you were working in the institutional segment, that might be an area of strength compared to multifamily. So when I was in South Carolina last week giving this talk, someone came up to me afterward and asked, can we see a corollary graph of the ABI next to construction spending to just see, how closely are these actually aligned? So that's what I'm trying to do with these next couple of slides. What we have in blue is just the basic construction spending chart. You can see here where I've circled it, that's the fall off of, the onset of the pandemic when everything sort of tanked. And then what we see in orange is the ABI, that billings index, whether it's up or down. Now, because the ABI is a forward-looking indicator, I bumped it ahead 9 to 12 months just to see, how closely these things align, but more importantly, to look at what's coming for us as we go into 2024, because, what we'll see in this first quarter, second quarter, third quarter of this year is potentially we have some hints of that in these ABI numbers. And I think what we're seeing here is, the ABI was down throughout 2023. I think we should probably anticipate a little bit of a slowdown in that construction spending. But I'm also looking at the ABI from, say October 22, it was down for several months in a row. And yet during those months on the actual construction spending, we saw an increase in spending. So, I think this is just another indicator to keep watch of. because the architects in that latest billings index release are pretty optimistic about where we are headed. So despite being below 50 for 8 of 12 months of 2023, they are generally optimistic about what's coming in the new year. Nearly 1 in 5 expect a down year, but nearly triple that share, 59% expect a good to great year. So something to keep an eye at. You know, the architects seem to be feeling pretty good about 2024. So next up, let's look at the Dodge Momentum Index. Similarly, the DMI, which is produced by Dodge Construction Network, this is looking at it's similar to the ABI, but it is looking at spending in the early stages with the contractor, and it's roughly a 12-month indicator of construction spending. So here we've got our latest DMI feedback from. I mean, this came out just a couple of days ago, and we are seeing, as Sarah Martin notes in this quote, we're seeing divergent trends between commercial and institutional. Institutional has been up while commercial down. And Sarah Martin is expecting a stronger year for 2024 as well. So similarly to my ABI chart, I decided let's take a look at DMI and see how it compares to actual construction spending. So again, our blue line is construction spending. Our orange line, that is the Dodge Momentum Index. Bump it forward 12 months. And this one, you know, I think it is hard to look at charts that are telling a pretty different story, but it is corollary data. And I think that it's easier to see with the DMI kind of the ebbs and flows of the market and how they line up when you lay them on top of one another. And here, you know, the DMI is just like the ABI, indicating a slowdown in growth for commercial construction in particular, or, you know, for overall construction spending. Okay, so I'm going to close out by looking at a couple of stats coming from our internal NGA reports. These are from our Window and Door publication, Glass Magazine, and they are intended to really take the temperature of what's happening in these two segments. So first up is our Window and Door Industry Pulse. This is a survey of fenestration manufacturers, suppliers, and dealers. These may be hot off the press figures for everybody watching. I think the magazine should hit doorsteps this week. But what are we seeing? Year-over-year profit margins increased for nearly half of our respondents, decreased for just 20%. So most folks in this arena had a pretty good 2023, and 60% expect sales to increase in 2024. What about on the glass and glazing side? So this data here comes from our Top 50 Glazers report. This is a report that comes out over the summer. So the data here, we'll have new data here in the July edition. But Glazers also had a pretty successful time coming out of pandemic. In our last report, collective sales for all of our top 50 Glazers topped $4 billion for just the second time in program history. Sales had increased 100% in the previous decade, and 61% of our companies had higher year-over-year sales. And finally, let's look at investment coming from those same reports. So for Window and Door, fenestration suppliers, manufacturers, dealers, half of respondents plan to expand their production capacity this year. 41% plan to purchase or upgrade machinery. And you can see in the chart on the right the specific areas that they're looking at for expansion beyond those. Top 50 Glazers, the Glazers are also investing. 69% of our Glazers, according to last year's survey, had invested in trucks, 63% in handling equipment. You know, maybe that's a reflection of on the handling side, in particular, of the larger, heavier lights we're seeing, the new technologies in that area, something for us to look at as we do our next survey. 67% invested in fabrication equipment, 58% in software. And we'll close out with a slide from our Top Glass Fabricators report. We will have a new Top Glass Fabricators report coming out in our April edition. This is from the 2023 edition. But what we're seeing here is our fabricators were planning to invest and expand their production capabilities last year. 81% of fabricators, according to the 2023 survey, intended to invest in equipment for 2023. 46% were intending to launch new product lines, and they were moving further and further toward automation. 65% automated part of their manufacturing processes in 2022, and 66% plan to automate in 2023. So here I've got a slide just for our NGA resources, noting all of the reports that I just went through. Check out glassmagazine.com for our most current edition, which includes our annual glass and glazing industry forecast. We'll have that Top Glass Fabricators report out in April. Top 50 Glazers is coming in July. On the residential side, Window and Doors Industry Pulse is coming out any day now. Top manufacturers will have a new report out in May, June. And we also launched at end of last year a new survey, the Window and Door Market Survey, published in partnership with John Burns Research and Consulting. This is a really powerful new market report to take the temperature of that industry, see where folks are, where they're expecting tomorrow to go. In terms of their own investments, in terms of the challenges that they see, in terms of how they're anticipating material costs, inflation to move or up or down. So definitely something to take a look at. We should have a new one coming out shortly for the next quarter. And here are a couple of additional resources from the slide deck specifically. And all of these will be available to folks listening to the webinar. So that closes it out for me. Thank you guys so much for being here. And I think I'll be able to take a few questions.
Great. Thank you so much, Katie.
Hey, everybody. Thanks for joining this afternoon.
It looked like there was one good note that was pointed out on the construction spending data. Would you want to comment on that again, just to make sure everybody saw?
Yes, yeah, we did have a question just asking if the construction spending, if that accounted for inflation, and the raw data that they put out is not inflation adjusted.
Great.
Yes, and one of our attendees notes that it's necessary to adjust for inflation. Absolutely. I think that's what Ken Simonson over at AGC noted. It's hard to look at these construction spending numbers and not be a bit puzzled about what they actually mean if we don't know, how that is affecting the data. So when we do have that inflation adjusted, when they put out that information, we can certainly revise those. We have a question about, do we know how many jobs were lost due to AI? I do not have, I think that's a wonderful question. Actually, at the BEC event coming up, our second day programming is looking all at technology and the role of AI as it relates to, the glazing side of things. And then we'll move into GPAD, where we're going to have, we'll be having a talk on AI for the fabricator as well. So I think those are, I encourage folks to attend those to continue that conversation. I do know that labor is still just the biggest issue. So even if AI is beginning to, or probably more automation at this point in the factory in particular, even if that is beginning to take away the need for a certain number of folks on the line, manufacturers still need more workers than they have. We have a question about labor shortages. Do we think the labor shortages will lead to changes in purchasing or design behaviors for architects? And this person notes that they're seeing more sales of unitized curtain wall that reduces field labor. Yeah, I think that prefab trend will continue. Part of it certainly is labor. There's also just the speed of install, the quality. Being able to control some of these in the facility before they go to the job site. Yeah, I would love to look at that a little bit more. That's a great point. Thanks for bringing that up. Let's see, we have a question about GSA or federal funding. Has that been accounted for with numbers regarding to glass scopes of work for new or retrofit projects? I would gather that's trying to look at whether or not that question is getting at whether the federal government GSA projects are accounted for in construction spending. I'm guessing maybe. And if so, those I believe those are included in the overall spending. And I do encourage, Dodge puts out, I think they have a quarterly webinar that I certainly like to attend. I know my colleague and friend of the industry, Max Perelstein, I know he keeps a pretty close eye on those as well. But yeah, if you'd like more information about how to get some of those construction economist talks, let me know. We have a question. Is there data that shows where construction spending is happening, i.e. regionally, city specific, et cetera? Yes, for sure. AGC of America puts out, Ken Simonson has some good data on that. He is very closely following where we're seeing construction spending geographically in addition to segment. The ABI, the Architectural Billings Index, also as part of their report, I just showed the segments in terms of construction, but they also do a geographic look just with the 4 major regions, but that provides a nice overview.
Thank you so much, Katie. I know this is a lot of information to digest and summarize for everyone. So we appreciate your work in doing that.
Well, I'm delighted to join the webinar. Thanks for having me, and thank you everybody for attending. And please don't hesitate to reach out. We at the magazines and at the NGA as a whole want your feedback in terms of where we should be looking. So if there's anything that you would like us to be checking out, the AI is a great example. Let us know.
Great, thank you. And one final reminder, you'll be receiving an email tomorrow afternoon seeking your feedback on this webinar, ideas for future webinars, and a link to the webpage glass.org/webinars, which will have this recording and the related handouts for your download at your convenience. Thanks so much for being with us this afternoon. Have a great day.